Hello everyone and welcome to another Uncomplication. My name is Ryan and on this channel I dig into some of the biggest questions searching for simplicity in this crazy modern world. Now, as many of you know, cryptocurrency has been a huge passion of mine lately, so much so that I've co-founded an entire community with the sole mission of growing humanity through crypto. That's the Crypto Garden. You can follow that YouTube channel. You can also go to thecryptogarden.io if you're interested in joining our community, where I am daily posting updates and analysis along with many other master gardeners who are experts in the space. In the meantime, I will continue to post crypto content on Uncomplication as we transition into bigger topics, more guests, more perspectives that help us find uncomplication in our lives. Let's get to today's video. Thanks for joining me. Cheers. Hello to all my friends who are still in the crypto space. I have some interesting things to look at with you today, and I want to dive right in. So, as you know, following this channel, we've been following these various Wyckoff distribution and accumulation patterns pretty much since April is when at least I was first paying attention. And we've seen in our bull market 2021 bull run this big distribution and then a big accumulation. And as we've taken the last several weeks to climb our way out of this accumulation zone, the question on everyone's mind is, where will price be going next? Now, if you are back in the YouTube sphere following your favorite crypto flavored personalities, especially as we've gotten back up into these price levels, as we kissed the 0.702 at $52-ish thousand, that narrative of the bull run being back on is in full swing. We then had what a lot of people were calling a flash crash that brought us all the way back down to the bottom of this range, back to $42,000 again. And we've been kind of building our way back up and out, and myself and many other YouTubers have been coming on and admitting that nobody knows in the short term exactly what things are going to do. And I've said that a number of times. So if you're coming to YouTube making predictions for your financial investments, I would ask how that worked last time. And maybe this feels very similar to things that we were feeling earlier in this year. For example, when was the last time that we were talking about a flash crash? When was the last time that we were feeling all of a sudden that panic of price dropping by 20% in an afternoon? Oh, maybe that was on the 18th of April, 17th and 18th of April. There's a repetition that is built into these Wyckoff cycles, because the same psychology that worked in April is the same psychology that is going to work again in September, because lo and behold, humans don't change much. Even when they've been taught a very stark lesson, they'll come back, they'll be fed from the same hand that just spanked them earlier. And so I want to show a different view of this, because I'll admit, I've been looking at this chart, I've been getting really lost in the technicals of this move, and as we've been coming out of this accumulation zone, I've been hopeful that we would see prices climb back to all-time highs. I had been saying throughout this whole period that, we don't really know whether things are going to break up or down until they do. And then once you look back, you can say, oh, that's what happened. So let's take a look now, because we're at a very, very interesting spot. And while I still don't know what the price is going to do, I do know what the price did last time we were here. And so one of the things I want to show you is that while I've been following this fairly complicated chart with all the ranges and names and things overlaid, earlier today I had Ben Cowen reach out to me, and he sent me a very simple image, which I've recreated here. And it was beautiful. It was beautiful in its simplicity, and as this is Uncomplication, I'm always looking for ways to remove complexity, believe it or not. And so take a look at this image with me for a moment. So let's take a look at this image. It is showing us price action from around December 2020 all the way up to the present day. And there's a few things that are really easy to observe right off the bat. The first is just how much this most recent move from the 20th of July until the present moment, how much it is, in a sense, a fractal, smaller version of the moves that we saw from that same period of December up until May, when we had the final capitulation, the crashing down of the market after that distribution that kicked off our accumulation range. So you can see here this yellow line. This is where in the first sell-off that happened on the 8th of January until about the 28th of January, so about 20 days, brought us all the way down to the $29,000 mark. And that basic range is where we came back to after the full distribution played out, and we had a spring at about $29,000 in July. So if we keep that same kind of fractal geometry, move it up to this smaller version of these same moves, you can see that in this first sell-off, as we were popping out of this zone, came down to about 37,000-ish. And so drawing that same line, we are currently hanging out in this place and time, very reminiscent of May of earlier this year. And so the question is, just as we had a drop down to that same about $29,000 range, are we likely to see that same fractal play out where we do come back down and test these levels around $37,000? Now, that's much less of a drop compared to the last time because this is a smaller overall move. You can see how we are essentially doing in the span of about 60 days what we previously did in a span of about 150 days, give or take. So we have, in a sense, reduced the overall time, and we've attenuated the percentage drop, so that when we went from our kind of sell-off point here back down to the $29,000, that was about 50%. And if we were to do the same type of move again, we would be looking at about 20%. So far less cataclysmic, but nevertheless, it feels a lot like history repeating itself. And so if we were to repeat this fractal, let's take a look at what that would look like. So I might have to adjust this guy here. Let me take it off the logarithmic scale. So I have here the chart pattern. Let me just show you how I drew this so that you can believe me when I say that it's very interesting. So if I come from this little moment here, this kind of springish moment, all the way through to current price. So I'm going to grab everything from the 12th of December to present day, and I'm going to get that as this kind of ghost chart pattern. So this is that same set of movements. And now let's line this little spring moment up with the spring moment in July. And let's just kind of shift and squish this guy back in so that we get a approximate overlay. And of course, these aren't exactly one-to-one, but the overall structure is, I would say, highly compelling when we kind of look at this. So here's that first big move up, down, up, across, put in this little W pattern, up to the test, back down, and let's even see if we can get this a little bit more in line with the present day. You can kind of see as I move this into place, you know, how these patterns kind of overlap, coalesce. So not looking to try and match every move, but just kind of matching from the bottom to the top would put the next accumulation and possible distribution if we were to even repeat this on a smaller scale. And again, I'm not saying that this is what's going to happen. I don't know what's going to happen, but you can kind of see that we are potentially hanging out on this ledge before a potential drop down to, you know, $34,000. So before we panic sell and before we repeat history again, let's take our zoomed out look. When in doubt, zoom out. And here is the Bitcoin price since early 2010 or mid 2010 all the way up to the present moment. And as I've said many times on this channel, when you zoom out like this, you just see the story of an asset that has been moving up and to the right. And you could put this chart in front of any 8-year-old and say, hey, complete the pattern, and they are likely to continue drawing up and to the right. So when I zoom out, when I stop paying attention to just the last 60 days or the last 150 days or whatever, and I just see this image, it gives me a lot of confidence that I don't have to worry, I don't have to care so much. And because I feel I've made some good choices lately, I've not put in more than I'm willing to lose, I'm not overextended, I'm not trading on leverage, I have no real risk at all when this price goes down because I'm looking at this longer timeline. That is what has allowed this history repeating to be a little bit different. Because one of the things that is very, very obvious to me, and really the most interesting thing that I want to talk about here on this channel and in these videos, is that if I bring up this chart again, it's not just the price that is mirroring that last fractal. It's everything. It's the narrative. It's the emotions. It is a smaller playing out of the same psychology that works time and again in these markets for smart money to fleece the public. Again, if you haven't really spent time with Richard Wyckoff, I suggest that you go and take a look at the information, not just about what these things are, but why they happen, why these accumulations and distributions have been playing out in stock markets since the beginning of stock markets. This is all from Richard Wyckoff in the early 20th century. So the psychology is built into these moves. And for me, while the price history has been repeating, my psychology has not. Because in these days, I was very much tied to the YouTube. I was listening to podcasts. I was just 24/7 following this story and feeling so smart as I watched my investment grow and grow. And then, yeah, that flash crash scared the pants out of me. And then when we were kind of marching back out of that hole and the narrative was turning back around and we were still going up to 100,000, that's when I learned about Wyckoff and really decided that I was done playing this game, that I was done being tied to the fear and greed, that, you know, my emotions, fear and greed, two of the most unhealthy human emotions there are, was actually being charted in an index, and that was an overlay of this market pattern. So my point is that in this whole time frame, because of the lessons learned here, I personally have been unplugged from a lot of that same media. The voices on YouTube are saying the same things that they were saying in these other stages. The predictions are the same. The narrative is the same. It's been the same psychological pattern playing out again. And I'm just letting you know that you have a choice, whether or not you're going to get completely swept up in that. And I've been really relieved to see a lot of people around me taking that step back, finding longer views of the market and what they want to get out of it, and not being so hung up on the day-to-day narrative. I know that there is not a YouTuber in the space that can come on and tell you with exact confidence what's going to happen next. I can't do that. I am just showing you patterns and thoughts, etc., but this should not be the reason why you sleep well at night or not. Listening to people and the voices that are on Twitter and YouTube and Reddit and all these places where you just get caught up in this this fever, I think is probably the biggest lesson to be learned. We got to learn it once, and now we're getting to learn it again in a smaller time frame. And so I really encourage everyone who's watching this to understand that these moves are not just the organic playing out of opportunity that's waiting to take your investments and shoot them to the moon, but is the playing out of an intelligent, orchestrated campaign that is engineered to mess with your emotions, to make you feel extremely greedy and buy things at the worst time, or extremely scared so you sell things at the worst time. And to know that first and foremost, that to me, Wyckoff is less about the predictive models or the schematics and the predictive power of the schematics. It's less about that, and it's more about just realizing that this market is manipulated, you are being manipulated, and the voices on YouTube are the main drivers of that effect. Even insofar as when I posted my Wyckoff distribution video that was here in this April timeframe, people watching that was perfect. It led to more FUD, it led to more people selling, it led to more fear, and here we are in the same point in time, and I'm posting another video. So I hope what I'm saying makes sense, and I hope that you understand why, as a personality on YouTube, I've decided not to dive into this market, be a daily crypto YouTuber. I'm coming on here infrequently and telling you that I don't have all the answers, that nobody does, and that really the best advice is to turn off the noise. Our crypto garden community, which we started, is a place that's, it feels sometimes more like a support group than a crypto community, because we're just there to talk to each other about our interests, about our health. We are exchanging information about crypto, but it's in this balanced sense, and I'm constantly encouraging people to take more time away from this, to take, making trades on longer time frames, and just not getting in a place where you're over leveraged or feeling the burn because you did something stupid here because you're listening to some YouTuber with diamond eyes and laser hands. Take control of your own decisions in this market and make them ones that you can sleep soundly whether the price goes up or down. And I know that sounds like a soapbox, but I just know how much it's helped me, and I really hope that it can eventually help you as well, and that if you are in this place where you're feeling out on a ledge, it's because you are, and you always are in crypto. So anchor up, find your buddies, and sit back and look at this zoomed out picture and celebrate that. So I'm gonna leave it there. I hope that this was in some way, shape, or form calming. I hope that it gives you a view of the landscape that you might not have had before, and I hope ultimately it convinces you that the best place you could be spending your time is not in front of YouTube listening to idiots like me yammer, but it is out in the sun or with your people or doing the things that you enjoy. So get back to that, and I'm going to help you out because I'm going to stop the video right now.